Hi, this is Joe Rabil from Rabil Stock Research. I'm going to be handling the reflections for the 2020 year for the financial sector. I provide research and consulting to some of the top institutional money managers in the country. So what I'm going to do today, I'm going to be going through how the financials played out in 2020, and I'm actually going to compare them to another sector to give you some perspective on what took place this year. Then I'm going to spend a few minutes showing what has taken place recently and how it could have a pretty big impact on 2020, both for the sector and I think for the overall market. And then finally, I'm going to go through some individual stocks inside this sector that appear to be setting up to perform well in 2021. So let's get into the first chart. And what I wanted to do was give you a little bit of an idea. So I do a report every Monday. I go through all the sectors, and what I've got here is on the left, I've got the industrials. On the right, I've got the financials. And I've got the simple price chart up above, but there's two different scales here. The first one in light green is the short-term positives, which is really nothing more than short-term momentum and the short-term trend. And what I've done is basically taken all the big cap stocks in the sector, and I go through them one at a time, and I determine each one of their positions based on, how they look from a short-term standpoint, again, both based on trend and momentum. And then the darker green line is the same concept, only I'm doing it from a bigger picture standpoint. I'm actually looking at whether it's in an uptrend or a downtrend. And so I'm basically giving you sort of a short-term look and then a longer-term look. And then on the right, I've got the same for the financials. And as I said, I do it for each sector and then also for all of them combined, all the sectors combined. But, it gives you a pretty good idea of what has taken place. If we see that this is the beginning of 2020, we had obviously the big crash this year to the downside, had a pretty big effect on both sectors, where the short-term positives got down to essentially zero, where there wasn't a stock in either one of these sectors that was positive from a short-term standpoint. And then even from a long-term standpoint, and a little bit more rare, we see that the industrials and the financials got down to in fact, the industrials got to zero from a longer term standpoint, as well as the financials got down very close to that. I don't think it actually ever went to zero, but it got very close. So that's a very deep oversold condition. And I can tell you, just going back in time, it's very rare to see them get that overdone. And so when we see that, it's typically, if the sentiment numbers get to a point where people are getting very, very bearish and we get this oversold of a reaction, it's usually a pretty good buying opportunity. That's what ended up happening here. So what I want to do, though, and I wanted to make sure I explained, is the comparison between what the industrials did this year and then what the financials did. Because the industrials came out, and again, as you see, when we get down to the low, basically the industrials and the financials were really in the same boat. All the stocks were kind of weak and broken. And then when the market turned and started to rally, both sectors did the same thing. They got a really good rally off the low. And in fact, from a short-term standpoint, the financials are actually a little bit more powerful. They rallied all the way up and got right up to close to 100% positive short-term trends in a very, very short period of time. Actually, a little bit quicker than the industrials did, although the industrials did get up to that level as well. But if we look at what took place from a trending standpoint, the actual trends of these two sectors, they both bottomed and turned up. But the industrials continued to move higher, where each of these individual stocks inside the industrial sector continued to improve, and more were turning into uptrends. And when you look at the financials, it stalled out. It started to move higher, and then it just hit kind of a level where you weren't seeing a continuation of more and more stocks participating in the rally. They actually stalled, and the sector just went sideways. And so, when we get this, when we have this pattern where you get a big spike low and then we start forming this ledge forming sideways, the whole goal is to see the resolution to the upside if it can happen. If we were to resolve to the downside, meaning you basically would put a little bit of a trend line going through here and here, and we've formed a little bit. So all throughout this year, we were pretty much, I would say for a very large portion of this period, while the industrial sector continued to show new stocks breaking out and changing their trend to the upside, the financials were just hovering and working sideways. And the question was, from a bigger picture standpoint, we're going to start to see real improvement and signs of breakouts to the upside so that we're going to start to see participation from this sector. I have been looking at this for a very, very long time from this standpoint, and it's very rare for the market to make substantial moves to the upside and continue trending to the upside without participation in the financials. Not necessarily meaning that they have to be a leadership group, but it's very rare for the financials to actually go down while the market is going up. So I think it's a very good sign to see that just recently we saw the resolution to the upside and we got the breakout. And now look at what's happening to the trends in the individual stocks in the financial sector. It went from not being above 50 to now exploding up to 75 and playing very much catch up in a very short period of time. We're at 75% are in uptrends now in the financial area, where 82% are in the industrial. So it's really not lagging that far behind. All of that has taken place really just in the last 2 to 3 weeks, late November, early December, lots of strength from that standpoint. So I think that's a really good sign. I want to switch over. I wanted to just use these two charts to give you a perspective of how the financials kind of lagged this year and have now started to kick into gear. And so I'm going to go to the next chart. And what I want to do is I want to spend a minute talking about the Treasury yields. And I'm looking at this on a monthly chart. I wanted to go back and just give you a pretty good idea what has taken place in the yields. And the main reason is, while it's not a one-to-one relationship, it's not a direct correlation, and this is obviously going to have a pretty big impact on a lot of the components in the financial sector, especially the banks. And I think the way this is playing out could give us a pretty good map of what to expect for 2021. We moved into, and if you notice, we had a really strong downtrend in the rates, and we found a bottom much in the way the financial sector did. But we've gotten somewhat of a rally that has taken place recently, and we're starting to move up from an extreme level. Again, I use ADX. I think it's very important to measure trend strength, but sometimes you can see when this ADX line gets this overdone to the upside. This was well over 50 when we got a bottom in the ADX. And it's showing it's a very strong trend to the downside, but sometimes you get almost like a climatic signal when you get too far and too much strength. It's almost like the trend is overheated. And now we're going through some form of a, check back or consolidation pattern. And I think we can look at MACD as well. If I bring back some history, look at when we get this far away from the zero line to the downside, you tend to expect some type of a retracement back to the upside. And we can see the periods where that's happened. And sometimes it has a big impact on the yields. And other times it might have a smaller impact. It might be more of a shorter, smaller rally. But I think odds favor a continuation of the rally in the near term. And I think that is favorable for the financial sector. And again, especially the banks specifically. So, let's go now. I want to look at the financial sector, and I want to show so this is the XLF spider, and I think this gives a really good idea. It gives you a very good idea of what took place this year. We saw the spike low, as I already described, strong move to the upside, and this green line is an 18-month moving average that I've overlaid onto the weekly chart. And so the 18-month gives a very good idea of the longer-term trend. And if a stock is really getting ready to do something meaningful, it'll tend to get above this line as opposed to failing underneath it. And what the financials did all year, for the most part, was after this big first rally, you got a really strong move, and it failed at the 18-month, pulled back, and this line is an 18-week. And we saw, another move up, and it failed at the 18-month moving average and then pulled back, rallied up again and failed at the 18-month moving average and pulled back again. But all the while, we were making higher lows all throughout. So this was somewhat of an encouraging sign, but we still needed the resolution to the upside, which is what we've seen now. And so the biggest key, I think, is this relative strength. So, all throughout this period, even though the price had been rallying, we really weren't seeing a significant rally in the relative strength. You can see the black line was still underperforming. This XLF versus the S&P was actually underperforming up until recently when we finally broke through the 18-month. We started to kick in on a relative basis, and now we're actually starting to see this sector outperform. So let's just look at this and figure out how this, or give a little bit more insight into how this could possibly play out going forward, and so we can get a much better idea of what to expect in 2021. So, we've obviously made a pretty big run, and I think there is some resistance. So I'm going to actually give you a different perspective. This is more of a close-up look, and it does show the MACD and the ADX as well. And so we can see that we had this sharp move, we consolidated, and then this breakout above this level here, right around 26, was really the sign that the trend is moving to the upside. Now, the way this should work is we should probably try and push our way higher. We're pretty late in the year. I think it's a little too late in the year to expect any kind of a significant correction. There's just not many days left, many trading days left in the year. So maybe we get a little bit of a pullback or something like that. But I think we're going to end the year probably on an up note. And maybe these things even work their way closer to the 30 area. But more importantly, either way, whether it pulls back first or pushes higher first, I think we're going to get some type of a consolidation pattern once we reach this resistance zone closer to 30. And I think this will back and fill and spend a little bit more time consolidating, working sideways, while the 18-week moving average catches up a little bit. I don't like the idea of trying to break out when you're stretched away from your 18-week moving average. It normally leads to false breakouts and stronger retracements and that type of thing. So I would be more on the lookout, and I would be more encouraged if I saw a little bit more follow through into the end of the year, and then maybe have a little bit of follow through at the beginning of next year, and then maybe go through a correction phase and let these moving averages catch up and have this set up and hold the 26 level throughout this correction. And if we can do that, then I think this really sets the stage for a nice breakout in 2021 and upside continuation for the sector. That's really how I would sort of see this playing out. I think the only way this sector doesn't participate in a way that is in other words, where in 2021 it doesn't have a good year, it would have to really fail here pretty quickly and come darting down back through the 26 area, not holding this breakout area around 26, 25, 75. To me, that would be the only way this index really struggles in 2021. I'm more inclined to believe that this relative strength improvement is going to see some form of a check back, like I say, probably in early 2021, and that sets the stage for a true trend change in the relative strength line and sets the stage for more improvement coming over the course of 2021. So again, what I'd be expecting is a little bit more follow through and then some consolidation taking place here that I think leads to more upside sometime, maybe in the first quarter or something like that. So we're going to have to be on our toes and watching. As we start to look at the individual stocks, I'm going to start with a BlackRock, and I want to use this as sort of like the type of example of what we're looking for. This was a leadership stock this year. It had the down move, but if you notice, it played out more like the other sectors. The basic materials did this type of move where they just turned on a dime and went straight up and broke out. I already showed the industrials where they turned on a dime and just took off. Didn't really hesitate as much as the financial sector did. BlackRock traded more like those sectors where it just turned, made a V bottom and went straight up to a new high. And then we had the check back to the breakout area. And that set up the true buying opportunity for this last leg. And I'm going to show you a number of individual stocks now, starting with Ameriprise Financial, that has the same position in place that BlackRock did, where it went through and broke out. Now this is finally broken out. We're looking for the pullback closer to 175, 180 and get that kind of like check back to the breakout area as your opportunity from a buying standpoint. Now, I'm only showing the weekly chart. I'm trying to save a little time here, but I'm going to go through the rest of these maybe a little bit quicker just because it's the same pattern. I just want to make sure I'm highlighting a number of names. I'm looking at MACD. I'm looking at the momentum on the ADX. And I'm doing it both on the monthly and the weekly. I'm just showing you the weekly patterns right now and showing the breakouts that are taking place there. If we looked at something like Cno Financial, this is a little bit different because it's coming from a downtrend, and now you're getting this massive breakout move with really strong momentum characteristics. 20 looks like very good support. If we got any kind of a check back down towards that area, that would probably be a pretty good opportunity. A Deutsche Bank is a big turnaround play. Stock was in a downtrend, has been working sideways for quite some time, and now we're starting to see an emergence, an improvement in price volume action and getting back above this key level here. So it's definitely a name to watch for 2021. First Foundation, another stock that had been going sideways, and now we got a really nice breakout. And all of these should set themselves up some type of a correction. I would say sometime in the early part of 2021 that should provide some kind of an opportunity. Again, improving momentum characteristics here. FRC is another one that I think has already shown a lot of strength. It was one that was already breaking out well ahead of the rest of the banks, and a lot of good support around 120. So another name I think I would keep an eye on over the course of the next month or two for a sign of a check back or a pullback. Lakeland Financial, another great, huge breakout at 50. It's probably going to spend some time consolidating here. Not that far away from an ideal buying opportunity after breaking out of such a huge base. Look at MC. This is a really nice basing pattern that has turned around, gotten through the 40 area, which is a key resistance, really more like the high 30s. But look at the momentum based on the ADX, crossing above 25 and showing a lot of strength here. I think this sets itself up for more upside after a correction, again, sometime over the next 2 to 4 weeks. And I think that represents something that could be a good stock for 2021. Morgan Stanley, one of the real powerful moves here recently, just strong price volume action with a gap, good momentum characteristics. Look for some type of retracement sometime, again, early next year, probably. That could provide an opportunity to be a buyer down closer to this breakout area. Schwab is another stock that has formed a little bit of an undercut here versus the lows from 2019, but has come on like gangbusters here recently. I think it's a little bit too overbought in the short term to be a buyer. I'd love to see this consolidate, check back. As long as it holds the 45 area, I think this is in very good shape and could set itself up again sometime early next year for a good opportunity. SIVB Financial, huge breakout, another leadership stock with really good momentum characteristics. As we go through the financials, this has been one of the stronger banks. We'd love to see some kind of a consolidation pattern. Again, I think 300 is pretty strong support for this. So any kind of a check back above that area that alleviates the overbought condition should be a pretty good buying opportunity. Just a few more here. State Street hasn't really kicked into gear yet, but I do like the pattern. Lots of improvement here. UBS is another one. Looks like the Deutsche Bank in a way with the bottoming pattern in place and then a strong breakout at 12.5. We're going to look for some type of a pullback there as well. And then I'm just going to finish off with one stock that's actually a little bit different. So Visa has been a very, very strong leadership stock in the financial area. And, I wanted to just point this out because it's been respecting the 18-month, this green line for years. And the only time it really broke this 18-month line was in the crash, and then it quickly got back above. And then if you notice on the last test, you held the 18-month again. So I think that is a very key line to be on the lookout for. And the reason why I'm watching this closely, because this is a stock that a lot of people have probably been holding for a long time. If you break the 18-month this time, you're going to do it in conjunction with weakness in the relative strength. If we were to come back down through this line, I would view that as a combination of both the monthly trend break as well as the relative strength line showing weakness. So this is the type of thing I'm always on the lookout for, topping patterns. And since this has been a good stock, we want to be on the lookout for this. Now, if we break this downtrend line that's been forming to the upside, then this has survived another correction and it's probably okay. But you always want to constantly be on the lookout for when trend line breaks take place on a relative strength. You want to go and make sure that the trend of the price is still okay. So, I hope you enjoyed watching the reflections for the financial sector. If you have any questions or comments, you can post them in the items below. You can find my research on rabilstockresearch.com, and my YouTube channel is Invest Like a Pro. Thanks for watching, and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.